probably heard the advice, don't rob your retirement. Don't touch your 401k, your IRA, your Roth. What if using that money, yes, even with penalty and income tax, helps you buy a home and start building real wealth? So here's an example. Let's say you pull $30,000 from your 401k, pay the 10% penalty and the income taxes, and end up with about $20,000 to use for a down payment. That gets you into a $500,000 house with a 4% down payment. Now let's look at what happens over the next 10 years. So even if your 401k grows at a very strong 12% annual return, which is above what most financial planners say you can achieve, your $30,000 would grow to probably around about $93,000, a $63,000 gain over 10 years. That's good, but it's not wealth building. But that $500,000 home, if you bought that at just a 3% annual appreciation, it's worth over $670,000 in 10 years. And at 4%, which is still below the national average over the last 65 years, it's worth $740,000. That's a $240,000 gain just from appreciation, not to mention the amortization of it, and you're paying down the mortgage. And here's a kicker. If you're married and sell the home, you could pay zero capital gains tax on up to $500,000 in profit. That's a tax-free wealth builder. So compare that to the 401k, where every dollar you pull out is taxed as ordinary income when you retire. So bottom line, if you're a first-time home buyer and your retirement account is the only place you've been able to save, it might be time to rethink the old advice, because owning real estate isn't just a lifestyle. It's one of the biggest wealth building opportunities most Americans will ever have. So let's talk, build your game plan, and get you out there and buy a home.